Okay, guys. Good afternoon. I'm here again to talk about um, a certain factor in trading that people don't really pay attention to. So while I'm going to be talking about that, I'm also going to be doing my analysis on XAUUSD markets. And you can actually use this to see how I go into the market and how I go out of the market also. And now, if you look at XAUUSD, first of all, you know that this is currently an uptrending movement. Now, as a trend trader, there are two things involved when you are a trend trader. Is either you want to buy the impulsive. The impulsive means the bigger move, which is this current gold move we're seeing here moving upward. So that you want to buy the impulsive from here, or from here, or you want to sell the retracement, which is the short-term movement. You have to know it. Now, most traders, or what most people do, is they make the mistake of placing a trade. This is a trending market, an uptrending market for that matter. And what they do is, after placing the trade, a sell trade, they want to indirectly force the market to start moving downwards. You don't force the market. You are not in charge of controlling what happens in the markets. Now, as a trend trader, if the market is moving upwards, two things are involved. It's either you look for a buy opportunity, which is going to be your long-term move or your long-term trade, or you look for the retracements, which is going to be your short-term movement. You know for sure that you are not holding that, you are not going to be holding that trade for long. It's for short term. It's just for a while. You just want to see what you can get and go out. Yes, probably you can place that trade, and even from that point, it starts moving up massively. Yes, you can do that. Or it starts moving down massively, or the market changes direction all of a sudden. Yes, you can decide to hold on a trade. So when you place the trade, you have your stop loss. It's a short-term move. You place the trade, you have your stop loss. The trade has started moving. You can decide to adjust your stop loss by securing a little profit, then see if it's going to go for a long term or it is just truly a short-term move. Yes, because market can reverse at any point. Then if you are doing the long-term buy, which is the impulsive move, like what I'm seeing here, which is the impulsive move. If you're doing a long-term buy from here, you just place your trade, have your stop loss below what gave you your signal, which is the candlestick. I am a big fan of the candlestick. Then you hold the trade. You secure, sorry, I had a break there. You secure your profit, then you let it run long term. Now short term. Now this currently, as we see, is a bullish movement upward. We all know that the general trend of gold is up, but we had a little retracement the day Donald Trump was announced the president, and a lot of factors also contributed the market to go down, which the election in US is also major part of that. For those trading Bitcoin, you know that it's the election in US that made the movement of Bitcoin to go down and, sorry, to go up. What am I saying? To go up. Then it also helps for you to know that after it was announced the president-elect, he also has used the crypto to buy something of recent, and being that the president-elect is using that or is using crypto, that is giving investors the confirmation that, okay, he is in support of crypto. So for him to be in support of crypto, that means crypto is a good investment. So a lot of people are rushing into crypto right now. But let's come back to what we're doing here, which is this gold. Now, I have been able to pick, if you look at what I've been able to do here, now, indirectly, what I've been able to do in this place is just to show you the possible points where we might have a retracement. I am not talking about fundamentals at this point because there is a news today. I'm not talking about fundamentals at this point because there's a news today, but I'm talking about pure technical approach to the market. I have been able to pick possible points where we might have a little bit of retracement or a major retracement. Now it all depends. It all depends on what comes out. But at the end of the day, remember, you are not in charge of the markets. You have no say over the markets. You are not in control of the markets. So what you just want to do is try and see if you can predict the direction at which it will probably reverse or probably continue to go back. Now, I just picked another point at my 4-hour time frame. Now, I come back to my 1-hour time frame. I zoom in. This long term. This long term. I'm not expecting this now. So I believe, let me even pull this out. Let me pull this out. I would love to pull this out. Okay. So this point you see here for me is where I am to expect the market to retrace. I am expecting the market to retrace now. At this point, even at looking at the 1-hour candle, you can see that we have the previous 1-hour candle gave a rejection, which is a hammer candle. Before that one, we had a doji candle, an indecision candle. Now, if this current 1-hour candle should cover up this my point here, if this 1-hour candle should cover up this point and drops down, or even at this point drops down and then goes this candle, I am either going to be taking it as a sell. But before we do that, let's go to the 15 minutes to confirm that the best way to go about this. Remember, top-down analysis. Everybody is singing it, top-down analysis, top-down analysis, top-down analysis. But are you really applying it into your strategy? Are you really applying it? You hear the likes of Dr. Wills always making the statement top-down analysis, top-down analysis. That is because they know you don't want to be trading on a smaller time frame, the 5 minutes, the 1 minute time frame. What are you doing in that location? You need to observe what the bigger boys are doing. You see the movement of gold for the past 1, 2, 3 days, 4. Let me add this one. This one is a little bit small, but at least it closed as a bullish candle, but a small bullish candle compared to the remaining ones. So at the end of the day, this is 1, 2, 3, 3 days of massive bullish activity. And we have a little bit of small bullish activity here. And you see that this market has been going up for a long period of time. Now, we all know that definitely whatsoever that goes up must definitely come down. And whatsoever that goes down will surely come up in trading. Let me use that word because most times not everything that goes down comes back up outside the environment of trading. But in trading, you know, whatever goes up will come down, which is the retracement. Whatever goes down will definitely go up, which is the impulsive move, the bullish activity. Definitely. So you see what gold has been doing for days now. And you see it here also on the 4-hour candle. So definitely, we must expect a retracement. But where is this retracement going to come from? Now, this retracement is not going to come from any other place either than this point I have picked. So I am to wait for the market at this particular location. Now, this is pure technical. This is not fundamental. Fundamentally, yes, gold is to hit 3,000. Fundamentally, gold is to hit 3,000. It is currently at 26,000. I mean, sorry, 2,000, sorry. It's currently at 2,670. We are expecting gold to hit 3,000. Sure, but it will not just fly and go to 3,000. It will not just fly and go to 3,000. So at the end of the day, gold must have a retracement, a pullback, an impulsive, a pullback, an impulsive, small move before it gets there. Definitely it will get there, but we are to expect. We cannot just see gold move like this, straight up to 3,000. No, 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 no. There must be a retracement. There must be a retracement. So now, I am certain because already it has been a bullish run for a long time. So what I want to do now is to catch the retracement. The retracement is what I am currently doing. And after I am done catching the retracement, then I will now have to know. We all know that gold is going to 3,000. Then I have to come back now and do an analysis to see where it's going to, because definitely when it retraces down, it's going down somewhere. When it gets down to a particular location, it will definitely get impulsive again and go back up to the 3,000. Everybody forecasting it to get to, but it will not just climb one day to 3,000. This is the movement. To not just climb like this to 3,000, there must be a retracement such as this we are seeing here. There must be a retracement before it moves up. So that's the retracement I am keeping these locations for now, for me to wait for it there. I am currently close to a retracement zone. And funny enough, there is a news today. And let me check for that news while we are in the markets. So I love to come to Forex Factory to do that. And by 2:30, we are having unemployment claims. I am a fundamental trader, more of a fundamental trader. Then that same 2:30, we are having Fed Manufacturing Index. And by 4 o'clock, we are having existing home sales. Yes, these are the fundamentals that I'm expecting now by 2:30 and by 4 o'clock. Then the remaining other ones, Forex Factory has indicated it as minor news. Euro, for those trading Euro USD, this is not a minor news. Consumer confidence. Remember, if you're trading USD, consumer confidence is a very strong news. So this is not. There's another platform I use again to check those for Euro news. Now, this is currently the central bank rates. The central bank rates. All these platforms are there to make it easy for you to be able to trade. I always tell people, yes, you may be a technical trader. You are good in your technicality. You know how to do what you are doing technically. It's making you money. It might not be making you money, but it all depends. But if you want to stay longer in this business, as long as there is a factor that can influence your market, negative or positive, you need to know what those factors are, which has to do with fundamentals. If you are a technical trader, let's say you are trading the synthetic markets, Let me use that. Let's say you're trading the synthetic markets. Yes, that is not influenced by news or any other factor. But anything that has to do with currency, stock, commodity, you need to know what moves those markets, because it's very, very important. Anything can happen in the markets. You have to be current. You have to be sure. Why are people saying gold is going to get to 3,000? It's because of fundamental reasons, geopolitical issues. What is currently going on in US is not because of price action. There are policies that have been set already, and there are a lot of activities going on, and these activities is what is making people to forecast that the price of gold will get to 3,000. It is not retail traders. So you need to know those factors. This is where I'm actually expecting bounce in this market. So at the end of the day, let's see what comes out. I have gone to the 15-minute candle now, and I have not actually seen, okay, close to that my region, close to that region, I currently have a tweezer top here. And what is a tweezer top? A tweezer top is a signal to sell. Remember your candlestick. If you did candlestick, or if you learned how to, if you have ever, I don't think there's any trader who trades who has not read the candlestick trading Bible. If you have read the candlestick trading Bible, you understand that these signals, when it is close to your resistance or your supply level or your demand zone, and it is spotted there, it is also valid. It may not be at the support zone exactly, but close to that region is also a valid signal to take the trade, either for a buy or for a sell. So you need that also. So the 15-minute candle has just given me. Let's see what the next two 15-minute candle will do before I can take the position. So if you're actually seeing this, this is at the price of $2,670 and some change there. So let's see what comes out. Remember I said something. I said this 1 hour candle, if this 1 hour candle should close bearish, I am definitely going in, setting my stop loss, above this region, which is after this point, because it's possible it may still go back up. Feel this point. That's to feel, or it doesn't have to feel, but it has to feel this point for me, because this is my own way of picking fair value gap. Everybody has their way, but this is the way I have been using, and funny enough, it has been working for me. So if your strategy is working for you, it's fine and good. But at the end of the day, don't criticize somebody's strategy when yours is not working for you. And don't criticize somebody's strategy because it's working for him. If it's not working for him, definitely, I don't think there's any sane person that will be doing something that is not working for him or her consistently and keeps failing, and he's still repeating that process. He has to come to a conclusion of knowing what he is doing and fix it up. So your strategy has to work for you. Everybody has their strategy. As long as it is working for you and it is paying you, I don't have an issue about that. But if your strategy is not working for you, that is when you need a teacher, a mentor, a tutor to show you what works. You need to meet somebody that has what works before you can also apply that and it starts working for you also. So this is just how simple it is. If you look at my chart, I don't have any indicators. I don't have any robots. What I do is pure price action. Look at possible support and demand zone. Look at points where we had an imbalance. Look for your fair value gaps close to those regions. Look at the trend of the market, decide what you want to be. Are you going to be buying the impulsive, or are you going to be selling the retracement? If it's a downtrend, are you going to be selling the impulsive, or are you going to be buying the retracement? Look at this on 1 hour. This is an impulsive move. Are you going to be buying this? Okay, let's say this started and you did not know, because for technical traders, most people don't know what happened. But this is the day Donald Trump was announced the president. If you are a fundamental trader and you follow up your markets very well, this was the day, that was last week, Wednesday, when it was announced the president-elect, and the market dropped. And that was how. So if, let's say you're not a fundamental trader, you did not know this. But after the impulsive move, we had a little bit of sideways, we had another impulsive, now we had a retracement, we had an impulsive again, then we had a little bit of small movement here, which you can scalp out small thing for yourself, for me. But I always love to go with the full movement of the market. I don't do scalping. I don't decide that. I let the market decide for me what kind of trade I am in. I don't decide for myself. I can decide to go into a trade right now, and at the end of the day, the trade starts going my way, and no dragging, no pullback, no attempting to hit my stop loss. Those kind of trade, I will not go out easily. I trail my stop. The ones are there that immediately I go in, I'm okay with the profit I've seen. I just close because I'm contented. You have to also be contented in this business. Contentment is what kills greed. Once you have the ability to be contented with the smallest amount you can make in the market, it kills greed, first of all. But when you are not contented, that's when you have greed coming into the market, and greed coming into you will also be an issue in your trading. So this is it, guys. Let's just wait and see what comes out at this point.